The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to Eclipse Day. Folks, make sure you don't take a picture of the eclipse with your camera or your cell phone, because I heard on the news that will make the lens in the camera dysfunctional, especially in cell phones. I don't know if that's true or not, but I heard that on Bloomberg, so I don't know if it's right or not, but why would Bloomberg tell us anything different? We'll start out the show here with our first chart, which is the 5-minute DAX. And as you can see, it follows the same small patterns that we're looking at in the mini and NASDAQ and everything else. All these charts actually look very much alike. I want to bring up the next one, which is, of course, the hourly chart. And as you can see, again, we have the same types of patterns that we're looking at, in the 5-minute. And, of course, if we take a look at the daily, which has been in a downtrend for quite some time now, you'll notice that we've had just a little bit of a bounce here over the last 4 or 5 days. So it's been, actually 7 days. So it's been a rather of a dead cat bounce. So we'll see. By the way, folks, just imagine if this were 400 years ago and you had an eclipse and you didn't know what it was. This had to be really scary for people, because they probably thought it was near the end of the world or something like that. But it's very, very very profound if you've ever been in one of these things, because it's really quite amazing. We don't have another one, I think, for about 11 years, and we won't have one that does like what we're doing now for another 100 years. We had the last one, big one like this, was 1918, I was told, and whether that means very much or not. I wanted to talk just a little bit about the effect of the eclipse. Folks, when I first started looking at astrology really closely, this was after my Drexel years. Dr. Miller showed me some stuff, and so I went down to August 2045. Well, that's a pretty good one. I'll have to miss that one. I'll be looking at that one from a different vantage point, I think. But the main thing is that we want to talk about here is how I got interested in this astrology, because when she started to show me the relationship between some of these planetary things and the Fibonacci numbers and numbers of sacred geometry, I was very interested, but I was still quite skeptical. Jim Twentyman, luckily we still had, a lot of our computer-generated data over the years, but what we needed to do is to go back and check to see what happened on key dates in the market. Like if you went back to July 8th, 1932, October of 1974, December 1974, August 1982, if you went back and looked at those really key dates, you would find that there's many similarities coming together where you have multiple conjunctions and oppositions. These are the large cycles that call in. Why it's called sacred geometry, it was basically, Gator, from what I was understand, it was because it was used by the ancients. That's why, and the fellow that coined that was John Michel. He wrote the book called The Dimensions of Paradise, and he wrote another book that was very good, where he explained how that how that all lines up, together, is basically what it was. I don't know if that's the answer or not, but that's what I was told, and I've read Michel's book. He passed away just a few years ago in the UK, and boy, he was very popular. It has nothing to do with religion. No, nothing to do with religion at all. But that's the main thing. But anyway, when we looked at all these different aspects, we'd see that they would come in at certain times. And that's why when we had this big aspect back in March the 5th of 2009, we had the whole, everything was lined up perfectly. Well, then what you have to do is you've got to take a look at the how do you enter the market? You've got to find a price point. So you have to use some type of a pattern or Fibonacci number or something to get you into the market. So that's one of the things that you want to keep in mind as you're looking at this. But we did a lot of statistics, folks. We went back from 1875 is when we first started to get relatively good data. That was 10 years after the Civil War. And then by 1885, you started to see little tiny chart patterns actually in the New York Times and, places like that. So as you moved, closer to the time where we are now, you're getting more and more data. Folks, when I first started trading, my first trade was 1959. In 1965, I was in California in January, and Ross Perot was in the offices of Walston and Company, which was run by my good friend John Raffoni, and he was there visiting in San Luis Obispo, and that day they did a record in the New York Stock Exchange, that day a record volume. Does anybody want to guess what that was in January of 1965, what that record volume day was? And here comes the ruling, judge's ruling, 5 million shares. Can you believe that? 5 million shares is all it was. And believe me, Intel does that in the first 5 minutes. Tampa is not in southern Florida is not in the path of the eclipse. They only get 15% of the view of the eclipse. It's still damaging if you look at the sun. Anybody that's silly enough to do that should be spanked. But anyway, the southern Florida is pretty much out of the view. Hey guys, all you guys and girls, all you got to do is watch the news tonight or go onto the internet, and you're going to see the whole thing. I know it's not going to be live, but that's one of the things that you don't have to worry about, but you will be able to see it. It's an incredible event. You can stop and think, folks. For 2.5 minutes, there's going to be parts of the country. It's dark. Solar panels aren't going to work. That's really going to be an amazing feat. That's why when I was doing the research this week and, looking at some of the patterns and stuff, I was wondering how the ancients must have felt when they saw this occurring, that it had to be something, really spectacular. And believe me, eclipses are mentioned in the Bible too. And but as far as stock things, I've not seen a great deal of difference between the eclipses and the new moons, which are accompanied eclipse. So the new moons work very well, but the eclipse hasn't lasted very long. I mean, it lasts 2 hours. That's right, just less than 2 hours, and it's all over. So as far as having a bigger effect, I don't know. I do know when we get these super full moons, when you get the moon is at either apogee, as far away from the Earth as it gets, or perigee, as close as it gets, those are very, very important because they're associated with earthquakes. And then if you have it over the the meridian of the Earth, that's also very, very important. So when you get those super full moons, those are the really, really big ones to pay so much attention to. So that's mainly. Just make sure you don't go looking at the sun, folks. There's too many ways of seeing this without damaging yourself, and that's something you don't want to do. And again, I did hear that if you put your cell phone up and took a picture of it, you got big trouble. So I don't know if that's true or not. Who knows? Anyway, we'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the Dow Jones, the components of the Dow Jones Industrial Average, starting with Boeing, going all the way down to General Electric, which is really ironic because General Electric used to be so goes the market, so goes General Electric, and you can see it hasn't been that way recently. It's been a much weaker than market stock. But if you looked at the top 15 there, you'll see that these stocks are price weighted. They're not cap weighted. In other words, the number of shares outstanding does not mean that much. Well, that means nothing. So it's just the price weighting of that, which is wrong, but that's due to the fact that the Dow Jones family did not want to change anything. Back in 1981, when they were negotiating to put a stock index future at the CME, my closest and dearest friend, Byron Tucker, was working with Leo Malabad, who was in charge of the exchange, and they had negotiations, and they would not budge. They did not want to have the Dow Jones Industrial Average associated anything with futures. And so what the smart minds got together and said, well, let's go to the S&P, and the S&P folks said, yes, let's do it. Then 4 years, I think it was 3 or 4 years later, the Dow Jones were approached by the Chicago Board of Trade, and then they put it in, but it's never been able to come anywhere near. I think it's 1/10 the volume of the futures index that we have here. And then, of course, later we had the NASDAQ and that question. Mike's asking a question, is wheat ready for a bounce? I thought it would bounce at the lunar eclipse, and it didn't. Now we're at the solar eclipse. I don't know if it's going to bounce or not, but these are the ones that they work really well when they work, but when they don't work, and they haven't worked this last time. So, basically you can't gauge it on. This should be a low today in wheat, and also in the corn. Beans are quite a ways from the bottom, but this is a cycle that is 14 days. And that new moon is usually pretty good, so we'll see. Remember, these solar eclipses, were marked, on ancient tablets going back to the Sumerians and Babylonians. Dr. Andrew Rouleau, in his book, The Evolution of Technical Analysis, goes through that and shows the examples of how they looked at some of these things through the eyes of these planetary things, which sometimes they work and sometimes they don't, because they're just cycles. That's basically, what we're watching here. That's really nothing more or nothing less. We were talking about IBM just a minute ago. I wanted to bring it up and to show you, when you're looking at some of these stocks, they look like, a whole lot different than the rest of the market, particularly if you take a look here at the weekly chart of IBM. You can see this stock topped back in 2013 with that three-drive pattern that we had right around the early part of the year of 2013, and it's been down ever since. And the ABCD structure on this says that IBM is going to 72. Now, I don't think it's going to get there today, but that's pretty much what the pattern looks like. Another question, there's some things on the internet about the collapse of the stock market based on the solar eclipse. Folks, we looked at every single solar eclipse from 1885 on, and we never found anything that would suggest there was going to be a crash during solar eclipses. I know they're related to new moons. That's the thing that might trigger it, but we didn't see anything related to that at all. It's really nothing there that I can see. Remember, you don't have that many sample sizes. You only get 2 a year. So, that's really what we're looking at. We'll probably will have another crash. We have these every 30 or 40 years, and we had one back in 1987, which was 30 years ago. So whether we have it or not, I don't know. The one thing that the two crashes have in common, and I'll bring this up since we're talking about it right now. I'll pull this up and we'll take a quick look at it. These are the two major crashes during what we call the recent years. This is not, in fact, these are the only two, 1929 and 1987. The only thing that they had in common was, if you notice, that September 3rd was a new moon and August the 25th was a new moon, and 55 days after that occurred was the crash. And you'll see that, we had a big crash in 1929. It went a little bit lower into November, and then it rallied for 3 months. It rallied actually 4 months. It rallied into April of 1930. And then from 1930 to 1932, it gave back 90% of its value. Now, on the lower crash, the one from 1987, we bottomed the next day on the 20th of October, went sideways for about 2 or 3 months, and then we took off and went up 10 times. So the only real crash that we had was the one in 1929. But the one in 1987, I was involved in that, folks. And let me tell you, that was a white-knuckle flight. You don't want to get involved with those. Those are terrible. The liquidity in the market just dried up. You couldn't get a trade off. This is when the S&P was trading at 10 handles. In other words, instead of $50 a point, it was $500 a point. And it was the bid and offer on those things was 10 to 20 handles. In other words, the S&P right now is trading at around 24.30. Well, the bid would be 24.10, and the offer would be 24.60. I mean, it was terrible. And the next day, there was all kinds of bankruptcies on the floor of the exchange because these guys were trapped into this and they didn't have any way of getting out. And that it was a real disaster. But that's what brought in the plunge protection team. I believe it was Alan Greenspan, Robert Rubin, and I don't remember who the third dude was, but there were three guys there that were really in charge of opening the vault. But that's what happened. The reason why the market stopped going down that day, folks, is that Alan Greenspan allowed the banks and brokerage companies to value their shares and stuff that they had at the last price. In other words, it wasn't market to market. They could use the last price, so they still had buying power. If they hadn't done that, there wouldn't have been any buying power. And they basically opened up the vaults of the Federal Reserve to allow people to come in and start buying stocks. And that's exactly what happened. In 1929, there was no plunge protection team, and when the market started to go down, there was nothing but a free fall there. And then after it bottomed in November of 1929, it rallied into the first week of April. 1930 at a 59.9% retracement of the whole move, and then it dropped into the low, which finally came in on July the 8th, 1932. But the depths of the depression really didn't happen until 1937, 1938, and we were brought out of that by World War II, which I hope we never see a World War III. And as Albert Einstein said, World War IV will be fought with sticks and stones. And that is probably very much true. We'll keep an eye on those things. But right now, this is just an eclipse day. It's going to be exciting. Whether it does a great deal or not, I'm not sure. When we come back, we need to talk a little bit about the gold market. We had something pretty significant happening to it. We should go over that. And we also need to look at a couple other little things that are in the market that should be interesting. In particular, copper. Copper is a very interesting one to watch very, very closely in this area here. So we'll be coming up with a break here, and we'll be able to see yeah, we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the flag is up. The market's selling off a little bit to start the day. It's just beginning of the day, of course, so pay close attention how it closes. I wanted to start this second section, let's try it again, Larry, the second section of the show with the chart of copper, because we are trading right now at the $2.98 a pound level. That equates to three major ratios, folks. The 38% ratio from 2011, the 61% retracement from 2013, the 78% retracement of 2014. What's really amazes me about this chart, folks, is the fact that we've had this tremendous move from 2016 in stocks, and we've only able to make a 38% retracement in copper. That should mean something fundamental, but I'm not sure. But if we get above the 302 per pound level, then this is probably wrong, and we could have these ratios would certainly be wrong above the 302 per pound level, and we would have a possibility of an ABCD structure that could take copper 60 cents higher. Now, whether it's going to do that or not, we'll have to wait and see. Now, getting back to one of the things that people always ask about here on the show is the relationship between gold and silver. And I wanted to start out with the relationship between the euro and the gold, because it has a good deal of correlation. The problem is it's really hard to trade that correlation, because there are periods where it doesn't, actually follow through. You can see several times, even on a long-term basis, you can see that it follows pretty nicely, but at other times, that's one's going up and the other's going down. But there is some correlation there, but as for trading purposes, I can't see it. So that's really the bottom line. However, if we do have some information on the gold and silver that I think is very important, and we'll look at it right here. Now, this is the chart of the gold, and overlaid on it is the blue line, which is the price of silver. As you can see, silver is in a distinct downtrend. Gold has reversed and made three drives to a top up here at that 1306 level. If you remember on Friday, I said it was really important that we close above that 1305 level, because of the fact that we were completing this pattern which was pretty much spot on. So when the market broke from the 1306, it dropped right down $19, and of course the harmonic number, the half harmonic number in gold is $17, and now we're trading around $12.95. Now, if we close above this 1306 anytime in the near future, then that to me would mean that this breakout is real, and we are going to have an ABCD structure in gold, taking our low at last December at 1130 up to this 1300, and that's going to take us to almost 1400, well, 1410 an ounce in gold. That would be a $100 move in gold if we can close it above this 1306 level. That's what I would be watching in the gold market if we can do it. But this divergence that we're seeing here is really, really important. And if we look at the XAU, and we'll put it up and let you take a look at that too. This is the gold silver index. And if you look at the gold and silver index here, you'll notice that the XAU has been in a pretty distinct trend line down since April. And on last Friday, we made a beautiful Gartley pattern up there at the 85.80 level. And, the market reversed, quite a bit from there. So unless we get above that, this is certainly indicative of a move that is going down, to the, it should be going down for more of a correction. So that's the main thing that we want to be keeping an eye on. So that's how I'm looking at the gold. So this is one of the reasons why I didn't think that gold breakout was going to be real, because we were seeing such a divergence between the XAU and the silver market. When you get breakouts, they're following together, and this was not really, going what's going on. So we'll see what's happening here, with this, to see what is going on. Anyway, that's pretty much what we're watching here. But the gold's got almost back to 1,300, which is a pretty big move here. So we'll watch it very, very closely, and we'll notice that we are having one heck of a run starting out today in this market, at least at the beginning of the day, to get us a pretty good idea of what we have moving on. The stocks are selling off a little bit. We're down near the lows of the day in the S&P. The NASDAQ is still holding up relatively well. But folks, this overall pattern in the stocks is so bearish that you just literally have to be you have to be really skeptical in here. There's just no question about it. There's just really no other way of looking at it other than that. It's got a spot here where you, when it starts to melt down, it's going to be very bad. I don't believe this is what we call a crash type day or anything. I believe that if that's going to happen, it's coming to come into the early October area. That's the most logical spot to do it. And that's primarily what I'm looking at from a technical standpoint and cycle standpoint. And the reason why I say that, of course, is if we take a look at the Bradley model, you'll be able to see that it's been holding up together relatively well here. And if we'll get this chart posted up here, we'll be able to see it without too much trouble at all. And that's the main thing that we want to be watching here. The other thing that is important, folks, is to remember that we have these markets. They're very, very extended from a very long, from a long time. We've been going up for 10 years. See, 07, yeah, we've been up for 10 years. So we've got a situation where we could have one heck of a retracement from this level. So just keep an eye on that, and we'll be seeing what's going on. Okay, that's what we're looking at here. We'll have an idea of what we're going to see, what's happening, and we'll be able to look at it very, very closely here as we finish up the rest of the day. We've got a break coming up here in just a second. I want to check the markets here, folks, just to see what we're doing here. We are, let's see, we're up about, let's see, gold's up about 5. We need that gold to close above that 1307 level, and then you've got a chance, for something pretty dramatic to happen. As far as the currencies, the euro's up a little bit. The pound is, basically unchanged. Not much is happening in some of the others, but these are the ones that we want to pay, relatively close attention to as we're seeing these unfold this morning. So it's still a bit early. But like I mentioned, I believe that, if you remember what happened on the lunar eclipse, we had the same type of action. The market started a little bit lower and then just took off for 3 days. It had a 3-day rally, and then it started down again. Well, with the solar eclipse, because it's a new moon, you could see the exact same thing happening. See, this market is not acting nearly as bearish as people are trying to tell you that it is. There's just no other way to look at it. There really isn't. And if you watch it closely, it's pretty apparent that this is, what's going on. So that's what I'm looking at. Now, whether that's going to be the case or not, we'll have to wait and see, but it's still relatively early in the move here. As far as the grain markets, they're still down on the day. They really haven't moved very much at all. There's a little support here in these grains, but again, it is a small amount of support, and it doesn't always line up the way that you would like to see it. So that's mainly what I'm looking at. Folks, I really think, well, I'll get back to this. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to mention that this coming Thursday, we're going to have Stan Harley. One second. Stan Harley of the Harley Stock Market Letter will be our guest, and he always has some good information for us. Now, I posted the chart here of the Dow, E-mini, S&P on a daily basis, and I put some cycles in here that you can see they're relatively symmetrical. What's important here, if you notice that after we made that 61% retracement at the lunar eclipse, one second, please. Sorry, folks. Little cat in my throat. Anyway, after we made that lunar eclipse, we rallied for 3 days up to a 78% retracement. And then we came down. We came very close to the ABCD pattern. Now, the cash market, the SPY, actually made that ABCD. That's why when you're coming in here to a new moon, on a day like today, you have a higher probability of a rally occurring more than anything else. What's important here, if you notice that this is a 29-day cycle that you see on the bottom here, which is basically the lunar cycle. Wow, sorry. One second, folks. I got to have some more vodka. 1 second. Oh, wow. Okay. Might have to cough again. Anyway, this 29-day cycle, which is basically the lunar cycle, which is, I believe, 28.5 days. So we had a 3 to 5 day rally there. That means that the market crested the early part of the cycle. That's usually very, very bearish, and that sets up a pretty significant low down on September, the 25th, which is, guess what? If you figure out the difference in the lunar cycle, you're going to see pretty close to will be near a new moon within a few days of a new moon down into that area. Now, if we take out the high of a 2480 in the S&P, then this format is certainly wrong. But right now, that's what I see is happening. We noticed that we had this big false breakout at 2487. And then we'll move to the downside. By the way, if you folks have any questions, which are always appreciative, 877-927-6648. It would be my pleasure to try to answer them for you. And if I don't know the answer, I'll make something up. Anyway, let's look along with one other one that I wanted to pay attention to, because we've had a couple of questions about it, and that is the banking index. if you'll notice, yes, that is known as right translation. That is left translation, Mr. Z. When the cycle crests early in the cycle, like a 29-day cycle, this crested on day 5 out of 29 days, and then it made a new low. We're taking out the low. That is left translation, and that is supposed to be very bullish. Of all the things that Hearst had in his book, the left translation and right translations were by far the best. Some of his other things proved to be inaccurate over the years when the statistics came in on some of these things. There's a nominal cycle, of course. The synchronicity was in there, but the nominal cycles switch back and forth so much that they're really hard to determine. And that's why I got into the astro part of it, because that was more related to expansion and contraction of these numbers. So. And that's just my opinion. That's really, what I'm looking at. But as we look here, I haven't put it up yet. Let's get this chart of the banking index. This was the leader of the pack. You'll notice it topped way back on February the 28th when we had the State of the Union, and the market broke from that level. It rallied up well over from April all the way through. Now we're making a 61% retracement back into this level. That's the whole thing. Now, where on the planet Earth does the eclipse actually start? It starts in Alaska, Marshall, and as I recall, that's what they said. That's a good question. I know that it goes through your state of, Washington first. That's the first part of it. It starts in Oregon, I guess, is the early time, and then it goes all the way through the South Carolina. I don't know. All I have is what's up here. This cannot be starting in Alaska. Let's just take a look at this, and I'll tell you why. If you look at this, you'll notice that you'll notice that it comes through the Portland area, and then all the way through, all the way down into Charleston, South Carolina, and then off into the future. But I don't know where the exact starting point is. That's beyond my pay grade. I'm trying to figure out to make money on a trade, let alone where the eclipse starts. So that much I don't know. So we'll just have to leave that for the gods to answer, because I'm not sure, how that is going to how that's going to unfold. Now, we have another market that's really, it starts in the sky. Very good, Mr. T. You flat out got that one right. We have another market that's really trying to get some sea legs, folks, and that is the crude oil. We made a 78% retracement down there at that 46.65 level. We rallied $2 a barrel on Friday, telling you that heads up, we have to pay attention to it. So watch the crude oil, folks, because as long as that 46.65 holds, we've got a chance to make that $51 a barrel level in the crude oil. The same thing is the patterns that we're seeing in the heating oil and also in the gasoline are the same thing. We've been talking about here for quite some time on these, but those are the ones that we want to pay a little bit attention to, as we look at these things. So just keep, very close eye on what's really happening to these, because they really jump around quite a bit. We backed off about 70 cents in crude oil already, which is normal. But if we look at crude oil, let's just take a quick look at it here, because if we look at it on a longer term basis, over a daily period and stuff, we had that move from 46.50. The 38% retracement on this, and this is going to be really important to watch, because the 38% retracement comes in at around the 47.90 level. That was in the midst of that big blow-off that we had on Friday. So watch 47.90 in crude oil, folks. That's going to be a real interesting spot to look at, and for several reasons, because that was also the high that we made back on the 16th of August before we came down and made new lows. So watch very closely that 47.90. It's going to be really, really interesting to watch from a technical point of view, for sure. That's another one that we're paying very, very close attention to. So we've got one more minute before we come up to the next break, and I wanted to cover, we had one other question from one of our sports fans here at TFNN, and I really appreciate all you guys listening and answering questions, because it makes a lot of, it's very important to me. I just wanted to show you here, folks, this is the question that someone just posed that show that S&P cash. If you notice, you see the S&P cash did make the ABCD structure, whereas the futures did not. That I think is relatively important. If that's the case, that means we're going to get a little bit of a rally here. But boys and girls, I've been doing this stuff for a very long time, and the one thing I feel most confident about is all you have to do is to sit at your desk and to make a prediction on where you think the stock market is going is roll your eyes over to the side of your desk and then look down, because this puppy is heading lower. Now, if it makes new highs, it's time for me to put on the old saddle on my little burro here in Tucson, Arizona, and ride off into the sunset. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price, price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have one of our favorite people on the line, Mr. Z from Philly. How you doing, buddy?
Hey, Larry. Thanks for taking the call. 2 minutes left. Quick question for you on the S&P, the weekly chart. Wanted to compare notes. Please share with us if the S&P starts breaking, if we get under 2420, 2405, and if we start accelerating lower, can you give us what you've looked at to be either targets or support levels much further down, just to have those in our back pocket, please?
First of all, John, I posted into the newsletter this week. The main target is 2,100 in the S&P. Now that's a smaller target. I think we could possibly, if things get really nasty, we could drop 25-30% very, very quickly. And the main reason I say that is the fact that the world just doesn't believe it can happen again. And you go back over periods like we had in 1987. And the overvaluation, supposedly like we have now, that sets up for numbers a lot lower than 2,100. But 2,100 in October is basically what I'm looking at.
Very good. And just to compare notes, that's not really that far down the 200-day exponential moving average, something that Basel uses. That's just down at 2050, which just shows, just on the short term, how extended this rally is. Well, listen, thanks so much, and thanks for answering that question on turns. And I saw you posted corn and wheat as candidates, so appreciate it, Larry.
Hey, thanks a lot, John. I really appreciate it. But again, folks, as we're talking all the time, it's all about risk control. You got to be careful, that's for sure. So pay attention to your trade, because we're just giving you ideas. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.